Good morning, everybody. I wanted to talk about why we don't trade every day as day traders. I'm actually recording this video on a day that I have personally chosen to not take any trades myself. And people always ask me, like, why would you not want to trade? The stock market could be doing this. You could be missing this move. And to be honest, I really don't care because the stock market at the end of the day can do whatever it is it wants to do. But if you don't have a plan or if you don't have a confirmed entry, you don't have to trade. Or if it's breaking a rule, you don't have to trade. So I want to talk about some of the reasons why we don't trade every day, even though we're day traders, and then some rules that I personally have for myself. The first reason why I would not take trades during the day is market volatility. So whether we have success, excessive or insufficient volatility, that can make it difficult to predict price movement, and that leads to increased risk. So, like, let's say on days where let me think. The example I always use, right? Let's say you are trading Tesla, right? And Elon Musk decided that he was going to go and kick a puppy or something. I'm pretty sure the stock for Tesla would shoot down. However, there could be a good chance that it won't. And everybody and their mom is going to be trying to get in on Tesla, trying to get a piece of whatever is going to happen as a result of that little kick. Because people love hopping into the stocks just off of fake news, or I don't want to say fake news, but just news in general, right? Like, let's say that Facebook was releasing a new feature, then all the new traders would be like, oh my gosh, Facebook is releasing a new feature. I got to go trade Facebook today. They're just going to find all types of reasons to enter into a trade. So that would be a reason why I wouldn't take a trade. Another major reason would just be my emotional state. I always tell people, hey, if you are just having one of those kind of days, go ahead and not trade. Not because you don't want to make your day better and people are always like, oh, but you can make money and you could do this. That's cool and all, that's great and dandy, but if you're not feeling it, go ahead and don't take a trade, for real, because there's no reason to be forcing a trade. Because one, if you're already having a bad day and let's say you're down on your trade or something, I promise you, you're going to try to take another trade. You're going to over leverage to make your day better by having taken that trade. There's just too much that can go wrong when you are not having a good emotional time. So if I'm not having one of those days, I'm gonna go ahead and I'm gonna sit out the trades for sure. Another one would be if you have no clear strategy. And I'm really talking to my beginners with this one here. I see a lot of people come into the Discord or come into trading and they're like, okay, I set up my trading account. What do I do now? I'm in a trade. I don't even know how to exit my trade. What? What? Like, what do you mean? Like you don't know how to exit a trade, but you're already hopping into a trade. You should know your strategy. You should know how to use your platforms. You should have a reason for entry. What I like to tell my mentorship students is if you cannot, if you cannot tell me why I entered this trade, you know what I mean? If you cannot tell me, hey, I'm entering this trade here because I saw this, you don't be in the trade at all. It's better to sit out than to force trades, always. Also, over trading prevention. You may want to avoid trading if you've already met your profit goals or experienced significant losses to prevent over trading and emotional decisions. I personally, this week, this price action sucked. I didn't lose a lot of money, but I lost enough to make me sit down and be like, you know what? I'm cool. Cool off this. I'm honestly very stingy when it comes to losing my trades. Like I could lose $200 and I'm done for the month. I hate losing. I really, really do. Anything I can do to prevent a loss, I will. So if I've already experienced some losses this week, I'm gonna go ahead and sit out and I'm gonna try again next week. It is okay. Just because we're day traders, again, does not mean that we need to trade every single day. Also, if there is a major economic event, for example, a Federal Reserve meeting, it can cause unpredictable swings and make it hard to trade effectively. If you guys ever go on forexfactory.com, that's the website that we look at for our market news. So that is Forex, that's supposed to be an E, but you know what I mean. If you go on forexfactory.com, then you will see all of the major economic news for the market. You want to see something that is a red folder, so it should look like this, and it should be under the US dollar. So it should look like this right next to the news or whatever it is that it's showing you. There's this guy, his name is Jerome Powell. Surprisingly, he's not Black, considering his name is Jerome. He is the Federal Reserve Chair. When he gets up there and speaks, the market does crazy things. Like it goes from here to here to here to here to here to here. It just be doing stuff, okay? If there's an FOMC meeting or a Federal Reserve meeting, I'm cool off the charts that day. If there is low liquidity or volume, that's another day that you would not want to take any trades. Days like market holidays, the days after a big event can have reduced market participation, or the days before them as well. I've learned in my 3 years of trading the weeks of holidays, so Christmas week, Thanksgiving week, I'm just better off not trading at all because our volume is going to be low regardless. Or the days like, let's say that NVIDIA is reporting earnings today after the bell close. The day of, that volume may be a lot lower because people are anticipating the bigger move and they're probably waiting to reserve their funds for that. So if there's any day like that, like again, major holiday, major event, I'm not going to take any trades. I think the most obvious one is going to be lack of confidence. If you don't feel confident in the market's direction or your analysis, it's often better to wait for clearer signals. And that's a major reason why I'm not taking trades for the rest of this week is because I'm just not confident in the market. I'm not having a fun time. I'm not confident in it. And we've been ranging for a few days. Now, just a little reminder for those who watch any of my market structure videos, the market either goes down, up, or sideways. Right now, the market's here. And we only make money when it does one of these two here. So I have not been having the best time, and that's why I'm cool off the markets. Also, if you just feel fatigued, burned out or fatigued, trading is mentally taxing. It is. I will always emphasize the importance of psychology in trading. And that's kind of what this video is here. It's like a psychology video for trading. You should avoid burning out on trading and take your breaks so that way you can have long-term success. There have been times in my 3 years where I haven't traded for like 2 whole months because I'm like, you know what, let me just take a step back and let it rock. When you're forcing every trade for the sake of, I gotta pay this bill or I gotta make this or I gotta do that, that is where mistakes are made. And that's where you will end up saying, you know what, trading's not for me. I'm done. I'm actually super cool off of this. And then, oh, did I already do that? Oh, news-driven volatility. Yes. So it's driven by news, especially political or unexpected events. It can become extremely volatile and harder to predict. So for example, the day of the election or the days leading up to, I don't know if it's on a weekend, may be very volatile, but not in a positive way. Or during those news things that I was talking about. So during a Fed meeting, it's not just the day of, but during it, I for sure will not take a trade. So, how do you actually lose a trade? Because for me, I've noticed that anytime I've ever lost a trade, it's because I have not followed the rules that I myself had set in place. So, what rules do I have in trading? The first one is going to be don't over leverage or full port. They kind of goes hand in hand. Full porting means to use every single thing that you have in your trading account, you know. So if you have $2,000 in your account and you spend all 200 on contracts, that would be full porting. Don't do that, and also don't over leverage. I always tell people to, if at the baseline, risk 10% of your account size and then leverage 10% of that. So if you have $1,000 in your account, put in $100 on contracts and risk 10% of that. Meaning once you're down 10%, you're cool, you're done, back up. The other one that we covered is no revenge trading. If you've taken a loss, go ahead and walk away from the charts. Just be done. It will try again tomorrow. Don't add to your loss because I know every trader has had a moment where they took a loss, tried to get it back, and then lost that trade. Now you're a double loser before 9 a.m. How does that feel? Terrible. So don't revenge trade. Wait for a confirmation. If you cannot explain to somebody why you're taking the trade outside of the stock's going up or the stock's going down, you don't need to take the trade. Also, no trading if you're sick, tired, or need to make money. We cover that as well. My favorite one is says, do not expect the stock market to do what you want it to do, and don't commit yourself to one singular direction. There will be many days when I mark up my charts in the morning and I'm like, okay, cool. I'm gonna see what Tesla does, and I think that Tesla is gonna be going up. Why would you think that Tesla is gonna be going up? What told you about that? Because if Tesla starts shooting down and you're so committed to it going up, you are going to miss out on a lot in your trading. Another one is never enter a trade without looking at a chart. This is one that I struggle with a lot because whenever I'm on my way to a flight or doing something cool, I'm like, you know what? Maybe I should just take a trade and just see if it's going up or down. And I'll take a trade, just trying to hop in and out, get a little quick buck. And sometimes I'll win, but most of the time I lose. So yeah, no, don't take trades without looking at charts. Just because the stock market is open 5 days a week does not mean that we need to be trading 5 days a week. That's the whole goal. Just because we're day traders does not mean we have to trade every single day. And that's the point of this video. It's okay to sit on your hands some days and not take trades. Trade your system. Don't try to trade everyone's strategy based off of everyone's opinion. One band, one sound. When you first get into trading, it's really, really easy to watch 100 videos on YouTube of how to trade this and how to trade that and this strategy and that way of view a chart. But at the end of the day, figure out what works for you and don't try to incorporate 100,000 different strategies into your trading. It's not going to be conducive. Again, don't overtrade. When you hit your profit goal, stop trading. Don't let a green trade go red. I'm very, very strict with my stop losses. If I'm ever up in a trade, the minute I see it going against me to like a point where I'm down significantly from what I was up, I'm cutting it. I'm never going to let a green trade turn red just because, oh, it could go up some more. Listen, again, we can't move the stock market. So if it gives you $200 and you wanted 250, you take your 200 and you be happy. Thank you. Don't try to become a millionaire by trading Fed meetings or earnings. I'm gonna have to do a separate video on earnings and how to trade earnings if you hated your life and wanted to do that. But if you're a beginner, stay away from earnings and stay away from the FOMC. Don't compare your wins or losses to others. You don't know how much they put in to make that. I see a lot of people in the trading community post profits and they're like, just made 50K today. But what they're not showing you is they put in 300K to make that. They didn't have anywhere near even like 100% returns, and you're comparing yourself to them. I always say focus on the percent return and not how much money you make. Because if you can consistently have high percent returns on a smaller account size, once you're able to scale and build that account up, you know you're good with being able to make your own profits. Not all news is useful. Please do your research. If Tesla, I don't know, if there's one lone car crash in Idaho, that's not going to tank the stock. That's not going to be helpful. Don't chase a trade that's already happened. If you see the stock has just shot up completely and you're like, cool, is it too late to get in? Yes. If you have to ask me, is it too late to get in? Go ahead and leave it alone. And the last one is don't hold a losing trade. Cut your losses and let your winning trades run. Many times I'll have been in a trade and I'm like, oh, I can't lose this much. It has to go up. Again, the stock market doesn't have to do anything that you tell it to do. So if I see I'm in a trade and it's losing, I'll cut it and let my winners run. But yeah, that's why I'm not trading today because a lot of my rules were not together. And I think it's really important to cover psychology and why we don't trade every day, even though we're day traders. I hope this video helped and I hope to see you guys around the Discord. Bye guys, I will see y'all next time.